Good morning, top of the morning. Today is October 27th, 2019. My name is Olawale Okabola, Spartacus Trading Corporation, here to bring you a quick and dirty pre-market report of the S&P E-mini. Please refer to my recap report from the 26th so you're up to speed about what I'm going to talk about. I talked about the inside day and the inside day theory, that it's a go with trade coming out of the inside day in either direction. Um, I listened to my own analysis and it definitely showed I had an upward bias, but I remained mentally flexible about what can happen. I talked about how we had a daytime inventory imbalance that could be corrected in the overnight or today. That's the only caution to going with the breakout to the upside. Overnight, we got that adjustment. The adjustment happened overnight where the market traded and touched the 10Y point of control. So at least in the overnight, that daytime inventory imbalance was adjusted. Then the market got long again. I talked about in my analysis from yesterday that if we gap, do not be surprised that we gap. And then the caveat was if we gap, we need to hold the gap. Because if we fill the gap, although value would be clearly higher, we activate, we pretty much activate the daytime inventory imbalance once again, because you can see we've been long for about I don't know, 4 or 5 hours, probably all of Europe. We've been long. So we need to keep that gap. So you got the gap rules, go with all gaps. That's not filled relatively quickly. If filled, value needs to get to unchanged, at least overlapping, in order to avoid another rally. Basically, gravity taking its hold, pulling price back up because value will be clearly higher. So we're playing the gap rules coming into today. You don't want to see this gap filled, or there could be, not a prediction, more liquidation to the downside. Not saying that we're going to come all the way back down to this anomaly, which is this prominent point of control that's 10 wide. I'm not saying we'll come back to that, but we can get further liquidation because of the daytime inventory imbalance, and then we're also long from overnight. Now, on the upside, I say I wouldn't be surprised if a gap. Why? I talked about these single prints, light volume. The market opens, you want to see continuation. You want the market to behave like it's in light volume in single prints, and tag this close, I'm sorry, this double distribution. Okay. And then if there's anything more to the upside, depending on where we open, you want to watch value to see if value can at least overlap this double distribution. If not, get above, depending on what kind of elongation we got, depending on how short the market is, because I believe it's going to be a lot of short covering, taking this market higher, along with some savvy traders who understand what's going on, who's going to buy and squeeze them. Given the fact that from this day, I talked about it yesterday, it was very, 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 very light volume. Now, the reason why I say that we'll get the all clear to go higher if the gap isn't filled is because this gap represents a new auction to the downside. No different than when these single prints, this double distribution held from Friday, that signaled a new auction to the downside. It's the same thing. Or when I talked about, hold on, or when I talked about yesterday for my recap report, these overnight single prints from Sunday, these single prints represents a new auction to the upside. So I'm saying that nothing changes with the most current information, that the market, the action is still up. Okay. So we are still up. Now we're up again with a new auction because of the gap. So we want to play the gap rules, go with all gaps. That isn't filled pretty quickly. The only caveat, because nothing's guaranteed, this is trading, right? We're going to have higher value when we open. You do not want the market to one time frame lower. If the market is one time framing lower, although we got higher value, the one time framing is suspending higher value. So please understand that concept. You want the market to show acceptance above, and one time frame higher. That is the best bet, the safe bet that we are going up. And then you continue to watch value development. If this is going to be the overnight high, you want to see value, not price, value begin to develop above this proposed, I say proposed, overnight high, because I don't know where the overnight high is going to be. But let's just say, for discussion purposes, this is the overnight high. And we open here, let's just say. Pit open, open, boom. You want value to develop above the overnight high. That shows that we're heading up. That makes sense because we're in the single prints. We close a double distribution, still got some light volume. And then you can see here, this could be a pause area or something like that for the market to take a breather if we're just trading up with reckless abandon. Still light, it's still a light volume day. Okay, so you want to be careful. You want to make sure you're on the right side of the trade. You want to pick your spots. And if you're in the trade going long, you want one time framing. If you're going to fade this move, you're not a buy, you don't believe it, you're not a buyer of this, you're going to fade it. You need one time framing to be in your favor. Even though you got higher value, that's against you. That's why you need one time frame lower to suspend higher value. You definitely want to see the market fill the gap and then begin to get more elongation to the downside. And that will take hold of this daytime inventory imbalance that's long from the overnight. But all of that is negated, absolutely negated, because of the proposed gap. So I hope this information isn't confusing. I hope this information is informative for you to keep you on the right side of the trade this morning. Um, yeah, so that's about it. Of course, I had an upward bias, so I took the first breakout. I got out immediately once the market started to tank. And then I took the second breakout, and I've since exited the trade. Typically, with the inside day, my rules are everything's fair game. The destination is to the extreme, but because we had a double distribution, this could be the possible destination. So that's why I was unwilling to not hold the position any longer. But usually, say we didn't have a double distribution, if you break out from an inside day, whether higher or lower, the destination, let's just say potential destination, is to the extreme of the prior day. Once you achieve that objective, all bets are off. So there could be more going up. We shall see. Not making any kind of predictions. I'm just going to read the market and take what the market gives me. All right, folks, getting ready for today. This is Olawale Okabola with Spartacus Trading Corporation, where serious advanced traders come to train and learn. Have a good day.